Ladies and gentlemen, welcome. I am the Crypto Crow, and today is Cardano Price Prediction time. We're going to be going over some Cardano price predictions, and we're going to be doing that to try and help educate some of you newer folks out there to what has happened in the past and how that relates to what is very likely happening now. And we're going to look at it on the charts, and we're going to kind of break some things down. It's going to be very easy to understand. You're going to be able to keep track of what I'm saying and what's going on because it's nothing super complex, but it's something that you can easily look for and watch yourself, especially as it relates to this next halving in April. And my price prediction for basically by the end of July, which July is probably going to be a pretty big month, especially for Cardano holders. Now, we're going to go ahead and dive into this. I don't want to waste a whole lot of time. I want this to be a quick video, easily reached by many who are interested in Cardano price predictions and price action and what's going on in the market. So let's go ahead and dive into it and see what's going on. Now, what we're seeing here is a two-screen, it's a split panel Cardano chart. What we see on the right is the current time frame, where we're at today as it relates to what's happening in the future. And then back here on the left is what happened back in 2020. All right. Now, if we look back here, we had the original bottom of Cardano, which was about 2 pennies. 2 pennies. This was 528 days from the halving in May of 2020. So the bottom, 528 days from the halving, and that was basically the first major bottom from the peak, right? You can see here as we dive in a little bit closer that we ultimately had another spill and an even lower bottom of about a penny, okay? This was 0.0168 cents. Ideal time to buy, and that was 60 days from the halving. So just 60 days from Bitcoin's halving in 2020, Cardano was its lowest price ever. Now, was that a fluke? We don't know, but we did drop all the way from 7 cents all the way to 1 cent. Okay? How many? And here's the funny thing. This was at a time when Cardano didn't really have much of anything. Cardano was still basically a white paper, a bunch of peer-reviewed studies, and a promise. Okay, that was basically it. Even Daedalus didn't work that well, I mean, at the time. And so we dropped from 7 cents all the way down to basically under 2 cents. And that was right before the halving when things started to take off. Now, we had that second low, that second bottom, 60 days from the halving. How many of you out there now that are new to the space would have been sitting here holding it at 7 cents, watched it drop all the way to a penny and thought Cardano's a scam? And what we did was we saw a lot of these narratives unfold about Cardano where people that were holding bags of other tokens were constantly trying to hold it down. I mean, you name it, it happened, right? Everybody was trying to dump on Cardano. And of course, I didn't fall into that. I was very much like, I read the papers. I read the tech behind it. I didn't understand all of it. To this day, I still don't understand every nuance of blockchain technology. I'm not a developer. But I understood the mission. I understood what they were building, and I trusted the people that were enlisted to pull this stuff off. And lo and behold, they've done a very good job. Now, that was the last market cycle. And from there, we are 40 days out from the halving right now, 40 days. Okay. And that is a pivotal point, obviously, for all of crypto, because that is when Bitcoin's mining yield is going to get cut in half yet again. So while all of these ETFs are buying up all of the available supply of Bitcoin on the market, the amount that is hitting the market from miners is going to be cut in half yet again. And this is why I said in a video a month and a half ago, in 6 months, there may not be any more Bitcoin because these institutions are buying it all up. And what happens when they buy it all up? Well, then we're going to start getting more spillover because at that point, once Bitcoin is controlled in the sense that a lot of these major institutions are buying up all of the available supply, yes, there's plenty of Bitcoin out there, but the question is at what price point are people willing to unload it for these institutions to pick up and take control of. And there are even security issues with that. We don't want any of these institutions to control 51% of the total Bitcoin. That's not good for the space. And it's definitely not good for Bitcoin. But I don't necessarily think that's going to be the case. What's going to happen is we're going to get more and more people, more and more institutions, more companies, more investment firms launching ETFs. And they're going to start launching ETFs into Ethereum, Cardano, and so forth. What else do we see in the market? And we saw a lot of the same stuff around this period back in 2020. We see a lot of narratives associated with Cardano, with security, with smart contracts, with TVL, basically all of the metrics that were carrying other blockchains at the time, and how basically Cardano was a ghost chain because it didn't have any of that yet. And then we launched smart contracts later on in the bull cycle, towards the peak of the bull cycle, and we never really got the benefit of what was being built on Cardano. We didn't have any of that back here. But what happened anyway was we rose up. We rose up 206% post halving. So from the bottom, from this close to halving bottom, we should call this BC, BC and AC. Okay, that'd be funny. So the bottom before the halving, keep in mind, we had nothing. We had no smart contracts. We had nothing at this time. But we rose up 179%. From the bottom, the local bottom, 60 days out from the halving, we rose up from basically just under 2 cents. We rose back up to about 5 cents, which was 179% pump. This was after that major drop from 7 cents. So we pulled back, we reset, entered the halving, and then just 76 days later, we went up 206%. Now, we take a look at the current price action of Cardano today and what has been happening. Well, you're noticing a couple of things. One, we got a little pullback here, but it wasn't nearly as substantial. And what else is happening right now? Well, rather than the bottom be around 2 cents, the bottom is 20 cents. Okay, we got a bottom peak, a bottom level here, and another bottom level here. And we just kind of bounced around this, but it's always been around above 20 cents. We have risen up all the way to basically an average of 75 cents. So you've got an average in the pre-market or the 2020 market of 5 cents to 75 cents. This is the difference between a blockchain with function and a blockchain that's built on an idea, okay? That is just presenting what is to come, the technology that is going to change things. So we go up 232%. Back here, we just rose up 179% into the halving. Here, we rose up 232%, and that's including this big drop in the middle of that. Okay, that is what's happening. That is the difference. So these narratives about Cardano this, Cardano that. Here's the one thing, and before I go into the actual predictions, I'm gonna make something very clear. For those of you that don't understand the technology behind Cardano, Cardano is the proven, the most decentralized blockchain out there. I feel like I'm hoping I'm not like becoming Rachel Maddow right now. And I'm like so obtuse and so direct with my, and then it comes out, everything I'm saying right now is garbage. But this is true. Cardano is the most decentralized blockchain out there. What are some of the major issues with the decentralized blockchain? The number one issue is that of control. What is one of the main things a lot of these major institutions want to have when you're talking about an investment vehicle? They want control. Not just control for them and their own power, but control for, the control based on the idea that their fiduciary duties are to be as cautious and safe as possible and basically put, investors' money into assets that are less risky, both from a fiscal standpoint, from a financial standpoint, but also one that they can potentially control to reap the most profits. All right. So, Cardano is not that, in the sense that it is decentralized. It is governed by the people, by its investors, its consensus algorithm, all of the voting, all of that stuff. It's by the people. So inherently, Cardano is a decentralized blockchain built for the people, for global finance, global smart contract, just basically global interest. Okay. And I don't mean globalist interest. I don't mean elite interest. I mean global in the sense that the community, the people abroad are able to control what happens on the blockchain, what projects get funded, so forth and so on. Even though I think Project Catalyst is a little whack, if I'm honest, I feel like a lot of money goes to places it shouldn't. But that's the nature of public control. And that very nature is something that a lot of these institutions don't want to play victim to, should that be the case. Now, that being said, we see a lot of the main narratives associated with cryptocurrency, Cardano, and other blockchains. And the perfect example of this, and I hate to pick on it yet again, but the perfect example of what I'm saying is take Solana versus Cardano. Solana pretends to be decentralized. I don't really think it is, folks. And it's highly, highly controlled by its initial investors, its team, and the venture capitalist groups that control it. They control the narrative around it. They can ultimately control what happens on it. There's just a lot of control. That is why Solana is the kind of the grand poobah of major institutional investors, as well as like major YouTubers and basically a lot of people that play into the narrative associated with Solana. That's also why numbers go up, because they can control that. And it was also, in my opinion, why I believe that it was like FTX's second largest holding in the entire exchange, because they could control a lot of what happened with it and its price. I don't think Solana was ever supposed to go up to $550 a token. Okay, I don't think that was that was naturally what was supposed to happen. So anyway, when it comes to Solana's narrative versus Cardano's narrative, you're talking about a more centralized, a more controlled blockchain versus a decentralized, less controlled blockchain, and that is the difference. That is ultimately the difference. Never mind the technical issues with Solana that basically consistently get ignored. Never mind like the faults of the blockchain, because this isn't about the tech. What it's about is narrative and control, pretty much like everything else we see in the world today. And guys like Charles get a lot of hate because he's absolutely against controlling the narrative, controlling things. They don't buy ads. They don't play all of these like political games. They don't play these games with the public. They are about the technology empowering the public to be able to achieve things on a blockchain, in a secure, decentralized blockchain. That's it. That's what the technology is all about. That's what Charles is all about. And there are many, many, many of us out there that support that. And we construct our own narrative based off of use, right? And based off of capability. Whereas other blockchains create their narratives by trying to push other projects down with lies. There's a difference between acknowledging the faults of a blockchain and what could be improved, or what should be better, or what should be basically called as it is, as opposed to basically trying to take like a lesser blockchain and create a narrative around it by pushing down others with false and misleading information. Where do we see this all the time now? Why has this become such a norm in society that it's okay to do this now? I don't really know what's happened there, but that is ultimately the difference between these blockchains and ultimately the narratives associated with them. So when we look at Cardano and we look at it on a chart, what we're seeing ultimately is we're seeing a very consistent rise leading into the halving, which I believe maybe we average out. We'll see. There's a belief that we could end up being at about $1 by the time we reach the halving, at which point these numbers will be changed. But excuse me. But I'm going to assume that we are going to settle somewhere around 80 cents. Okay. And I've even got this set at about 77, 78 cents. So I'm averaging it out here. Now, if what happened in the previous market, so we can already see we're up 232% over 179% in the previous market. We're already outperforming everything that's happened in the 22 market or the 2020 market. We're outperforming those metrics quite substantially, really. So if we were to just hazard a guess for the Cardano price predictions of July of 2024 post-halving, it's very likely that if we were to just get 100% return between now and then, okay, based off of these metrics here, where we rose up 206% in a period of 76 days. Let's roll that out to 80 days. If we just got to 100%, okay, we're still looking at $1.57, okay? $1.57, and this is right after the halving. If we got to 200%, which is still underperforming what we did in the previous cycle, we're at $2.33. This, I believe, is going to be far more likely than just hitting $1.53 by July of 2024. And if we want to try and match the sentiment and match exactly what happened from the bottom to the top, we're looking at a 252% return, which would take us to somewhere around $2.72. Folks, that is basically right after the halving. And then from that point, you notice we got a dip. And that dip took us all the way back down to around 7 cents in that cycle. Okay. So what that dip did was it basically took us back to the peak over here. It took us back to that local high before the halving. And we tried to come back to that, but we didn't. And if you look at it, you can look at it even on using a 50 moving average on a daily chart, which these are all daily candles. You can see here the differences between what the price momentum. We're generally staying above that 50 moving average, whereas here we stayed above it, but we came below it quite a bit. We came substantially below it over here at this local bottom, where here we didn't even touch the local bottom. The price is wanting to move up. The price is moving up dramatically over the previous cycle. Well, why is that? Well, a lot of that, I mean, in a nutshell, by July of 2024, my prediction is we're going to see anywhere between $1.50 and let's just call it a $3 Cardano. We might see getting close to original all-time highs by July. So, you know, that ultimately in a nutshell is what I see happening. And, you know, listen, there are a lot of reasons for this, folks. And the reasons are we have TVL, we have smart contracts, we have tens of thousands of native assets all over the blockchain. We have a substantial number of applications, DeFi and otherwise, either having launched since the last peak of the last cycle that we've got no benefit from so far. There are so many elements that are tied into Cardano's price momentum in this cycle. And that's a really, really big deal. And I'm not trying to be like a Cardano evangelist, okay? But I'm trying to call it as I see it, and I'm trying to paint the picture so that people that are new to the space understand how things work. Number one, you can't believe everything you see all over the interwebs by just every Tom, Dick, and Harry. Everybody has a vested interest in the outcome of whatever narrative they're trying to project, all right? I do as well. I mean, I am a big Cardano holder, but I am a big Cardano holder because of the years I've been following its progress since 2017 and what I believe is being developed. I don't care about the general narratives that other people are putting out there, especially these bourgeois articles related to, you know, Cardano's competition with Solana and all of these articles that are constantly trying to put Solana in a positive light against all of the realistic things that are happening. I mean, it's nonsensical to me. But at the same time, we're seeing it with a lot of meme coins. What we see is Cardano is definitely one of the most popular blockchains amongst the thinking man, the people, men and women. There are a lot of female Cardano evangelists out there, especially on Twitter, and I love to see it. I love to see all of these people coming together, learning more about the tech and better understanding why Cardano exists to begin with. Why are applications and companies like World Mobile Token, who exist specifically to connect the unconnected in places that are underserviced and underserved by the big telecommunication companies, these pockets of communities, villages, cities, you name it, that these major tech companies don't want to service because of the expense associated with it and the potential, lack of return financially from doing that. You've got companies like World Mobile Token that are utilizing new technologies to be able to connect these individuals, and they're doing it utilizing the Cardano blockchain for a reason. Cardano doesn't shut down. What if an application like this was built on Solana and you really never knew when your phones was going to work? You never really knew when you weren't going to be able to reach out to mom, dad, uncle, Billy, Bob, or whoever, maybe people on the mainland that are supposed to be sending you some money to help you live because they're over here working. I mean, there's so many different variables to that situation. But I know I personally wouldn't trust a blockchain like Solana, and quite frankly, a lot of these other blockchains, even Ethereum for that matter, because a lot of the activities that happen on Ethereum, especially as we move into a bull market, the fees get so astronomically high that it can often cost you more in transaction fees than the transaction you're trying to send. That's nonsensical. That doesn't work, and it doesn't matter how many ways a lot of these first to market blockchains, they throw a bunch of stuff to the wall to see what sticks, and then they spend the rest of their careers trying to patch all these various holes as the technology and the space around them continue to grow and expand in use and demand and all of that. And we're not seeing any of that with Cardano because they're taking a longer time to develop things the right way. And it may be a little bit more difficult in some cases to build on because you're having to learn new languages like Haskell and things of that nature. But once you've got it, you've got it. And that's the difference. And so there are just so many reasons, but ultimately that's my price prediction for Cardano as we move past the halving. And into July, just based off of the previous market cycle. And to be quite honest with you, if we're looking at the 2020 cycle compared to the 2017 into 2018, folks, 2017, 2018 was far, far more powerful. And I think that's also one of the reasons why we had a lot more momentum going into 2017 than we did in 2021. And I also believe that the 2021 into 2022 market cycle was split, and we had two peaks, which I called on the day in April 13th, 2021. I said the market just peaked, but we're going to have another peak here. And everybody thought I was insane. But a lot of that has to do with a lot of the institutions that were getting into the space and ultimately trading the markets the same way they were trading traditional markets, and the charts lined up identically to the 2007 NASDAQ, literally almost to the letter. And that's how I was able to see what was happening in the future and what was likely coming. And I said, of course, I could always be wrong because I'm always right sometimes. But that's what I see happening in the near future. That's what I think everybody's confidence should just be booming right now, because with these ETFs changing the way everything is working in terms of price action with crypto, and I don't just mean Cardano, but pretty much everything across the board, I believe that this is in preparation for what I believe is going to be one of the most fruitful years, and not just crypto, but finance overall. It's an election year. And I think that's one of the reasons why these cycles conclude and peak out in an election year, because it helps whoever is there, whoever's running, and whoever's able to take credit for it. So we'll see. But, I'm excited. I think everybody else should be excited, and I appreciate you joining me. Hopefully, let me know. What do you think? Am I right on this? You guys see this too? What are your thoughts on what's going to happen between now, the halving, and post-halving for the first couple months? I'd love to hear it. Until next time, guys and gals, crow your coins. Thanks for joining me, and I'll see you soon.